Alrighty. Welcome everyone. So good to have you with us this evening. I'm excited for tonight, guys. We got a surprise coming at the end of the session, so make sure you stick around till the end. But tonight, we put it out to the whole team. What do you want to learn more about? And the MACD came up multiple times. And so we have a custom one that Dad has built for us. But tonight we're going to go through all the ins and outs of it. This is not going to be the only class to indoor classes on the MACD. But if you're brand new to it, or if you've never used it before, or you have tweaked with it a little bit, you're definitely going to learn something tonight as to how to best utilize it when reading for divergence, but also using it in the way that we do to track with trend. So before we dive in, I'm gonna let Dad jump on in a moment. Before he does though, I'm gonna share a little bit of, just a little tiny bit of history about the MACD, and then we'll go from there. So I'm gonna screen share super quick to, let me get the right site here. So I pulled up, let me see if this is the right one here. I've got that right there, but what is the MACD? You can type this in Investopedia and go and do some more research if you like, but real simple, the moving average convergence divergence, so MACD, moving average convergence divergence indicator, helps investors identify price trends. So same for investing, same for trading. What is a MACD? Moving average convergence divergence is a technical indicator to help investors identify price trends, measure trend momentum, and identify entry points for buying or selling. So I'm not going to go more into it. You guys can get in here and simply go to investopedia.com if you want to read about those nerdy things. But tonight we've got Dad with us who understands a lot of these details in high amounts because he's tweaked with them, adjusted them, played with them. If you want to go and read some of this stuff, you can. I'm going to buzz past that right now and unshare my screen. And let me go back to the other thing I had there. I'm going to come back to this picture later on and talk about divergence in detail. But before we get there, I'm going to get Dad to actually talk about some of the ins and outs of what make up a MACD. So, Dad, I'm going to pin you and we're going to dive into it. Where are you? There we
Here
go.
we go.
There you are. All
Can you
right.
see me and
Well,
can you hear me?
I can. Let's get into it. I'll jump out the way. Go for it.
Okay, so welcome everyone. Good to have you with us. As TASS said, it's all about the MACD tonight. So I'm just going to share a short little introduction, and then TASS is going to expand it a bit. And then at the end, we've got a bit of surprise. So I'm going to jump in straight away and share my screen. So TASS, you can give me permission on my side. Okay, share. Right, so I want this one. All right, so here we go. So hopefully you can see my screen all right. So here we go. So I thought what I would do is start off with the stock standard MACD that I began with. So this is, if you go onto TradingView and you click MACD, this is what you will get. So I thought I'd just start from here. So I mean, it's really got only four parts to know. There's the MACD line, which is the blue line. Then and this is the standard way. Obviously, we've changed our colors. I'm just looking at the original first. And you've got the signal line, which is that orange line. Then you've got the histogram. And then there's also a zero line. It's not plotted. I'll show you in a minute what it looks like plotted. So that's simply what it is. And as Tom mentioned, I mean, this is the second best indicator on TradingView. The best one is TRENDFORCE, by the way. Sorry, I couldn't help that. But this is really, really good. This is a really, really great indicator. That's why we've incorporated it into our strategy. So what's good about it is that it's one of the best measurements of trend and momentum. So as you know, our strategy is all about trading with trend. It's all about momentum. And the MACD gives you the greatest indication, the greatest picture, and it's quite easy to read too. So basically, it's, to get a little bit technical, the blue line is the MACD line. And that is, I mean, it's calculated. If you look here, you'll see, if you look in the settings of the MACD, you can see under inputs, there's two EMAs, the 12 and the 26. So the blue EMA, the blue MACD line is made up of those two moving averages. It's basically the fast length minus the slow length. But it is not as simple as that because there's a whole formula. You can dig it up and have a look at it. It gives a lot of smoothing. And that's what's really nice about the MACD line and this MACD indicator. It's very smooth. So there's a lot of smoothing calculations built into it. Then the signal line, that's a 9, it's like a 9 EMA, but it's a 9 EMA of the MACD. So, I mean, it gets a little bit complicating, but basically that is used as a signal line. And when they cross over, it's regarded as a signal. So a lot of people who use the MACD would actually enter trades on a crossover. So when So when the signal and the blue line cross over, that can be considered conditions for a sell. And likewise, when you get a bullish crossover, when blue crosses orange, that is called a bullish crossover. People can use that as a buy signal. So we can see there was a crossover there, and after the crossover, price moved up. It doesn't always do that. So it's not 100% accurate, and it does lag. So almost every indicator is a lagging indicator. So you've got the EMA line and the signal line, and then you've also got what's called the histogram. And the histogram is simply the difference between the space between the MACD line and the signal line. So when that cross over, you can see it crossed over there. We can see 0. It crosses over at 0. And then as the gap, you see there's a very narrow gap there, and so the histogram was very flat. But as the gap widens, so the histogram gets wider. And as soon as it starts getting narrower, you can see the histogram begins to get smaller and fall away because that gap is getting narrower, and it goes translucent. And it's the same, for a sell. Like over here, if we look, I'm just looking this is the, what do we got, the NAS from this morning. So you can see there was a bearish crossover. And at the crossover, you can see it's at 0. And as the gap between the signal line and the MACD line increases, so the histogram gets larger and larger. And once it starts decreasing, again, the histogram gets smaller and smaller, and it goes opaque. So that is just a very, very, very simple explanation. So what we've done, I'm going to put on our custom-made indicator because we're looking at trend zones. The trend zones are integral part of our strategy. So this is obviously that's a bullish trend zone, price moving up. This is bearish, the trading trend zone, price moving down. And the whole idea in our strategy is to match those up. So if I put on our MACD, you can see it's identical. Now I've left off the convergence lines and those kind of things just to keep it really simple. So what I thought I would do to make the whole strategy simple, I color-coded our custom-made MACD. So there's obviously no colorful here, but here I've got colorful, and I've changed the MACD line and the signal line to change color with trend. So here we've got the MACD line. As soon as it bottoms out, you can see immediately when it goes to green, that gives you an early indication the trend is changing. The same with the signal line. It was red up to there, it's changed to green, showing trend change. And so I did this to make it very easy because obviously we've got our rules, TASS, and the first rule is the trend zones, do they align? And so if you get a sell signal and there's separation, for this to definitely get a point here because you just got separation. And so we thought it would make it very easy to look at the trend. Now, at the moment, you don't actually need, I'm going to talk a bit about histogram and I'll come back at the end. So we don't look a lot at the histogram at the moment. I mean, it is helpful. Tal will explain it a little bit more. We mainly look at the MACD and the signal line and the colorful. So if I turned off the MACD here, so let's go here and turn off the histogram, and I've put in a signal line, we can see here it's quite easy to read. So we're really following these moves. And so we want to see separation. And Tal often comments when you're doing our live trades, he said there's great separation. Look at the MACD. We can see how smooth it is. That's the wonderful thing about the MACD, especially when the market's trending. It's very smooth. So this makes it very easy to read. And so, I mean, Tal may mention it, but the safest place to enter trades is when there's a crossover above 0. So this white line I've just put in extra, that's the 0 line. Safe trades are when there's a crossover above 0 for sells to go long, to go short. And likewise, the safest buys are when the MACD and signal line cross below 0. And so you want to see separation. So it's great when you're in a trade and you see these lines running parallel, nice and smooth, and you see the blue. But you can see it's way easier. Let me just turn the histogram on. I think you will agree that it's way easier to read the bottom chart with the color coding than to try to figure out, because just one glance can tell you what the trend is. And so I'll just actually delete this one. And so that's how we basically trade. We use this as an integral part of our strategy, and we look for the crossovers, and we look for these lines to run parallel. So entries for trades do become more risky. Tom may cover this. So when the MACD starts going sideways, then it is a bit more risky to enter. You always want separation. So although there was a seller momentum signal, there was a little bit of risk there. We can see we're going parallel. There's no separation. But once you get separation over here, for example, that would be in a much safer place to enter the continuation of that trade. So I think I'll leave it there and hand back to you, and then you can come back to me at the end, and I'm going to share some more. So I'll stop my screen share and hand back to you for more nerdy things. So back to you.
Alrighty, thank you. Let's keep getting nerdy. So I'm going to unpin you quickly, figure out the Zoom side of it. All right, first off, I see Zeph asking the MACD lags question mark. So there is an aspect of lag in the sense that any moving average, anything with a moving average involved is the average of the previous, X amount of candles, depending on what it's set to. So there is a lagging sense that it's a calculated average of what's happened prior. So by that, it lags as in it's giving us information of what's already happened. So that's when people talk about it being a lagging indicator. It is giving information of what has been, but it can be a leading indicator in the sense that it can tell us what's about to happen, depending on how you learn to read it. So whether that's divergence or convergence, I'll touch on that with some examples in a minute. So great question. So it's leading in the sense that if you're getting divergence, being like you're reading divergence from it, it's telling you something is about to happen, but the information that it's showing you directly is using what has happened before, but it gives you information on what's going to happen next. So it's a little bit of a both and. Some people say it's lagging, at the same time it gives you information on what's about to happen. So hope that kind of clears that up, hopefully a bit clearer than mud. But I'm going to dive in back to sharing my screen, and let's do this. Let me go share, figure out where I was. I think we're in here, and you can come and remember that, guys, this site, let me just shove this in the chat on Zoom so you guys have all got access to it. I've lost my chat now that I am screen sharing, but it's in there, and I'll drop that in our group chat too, and then everyone online can just go and find that if you're watching the Zoom later. But then go have a read, get all nerdy. There we go, that's in our group chat, and it talks about the limitations there and the crossovers and all the things that Dad was talking about. So this right here though, like if you type in MACD divergence convergence into Google, you're going to get a whole lot of images very, very similar to this. And funny enough, this is one that someone published inside of TradingView. So I thought, well, this is pretty simple enough to follow. And there's one other one I'm going to pull up in a moment, because there are different classes of strength, which they kind of have right here. So strong, medium, weak, and hidden we'll touch on briefly. But obviously, there's two aspects that we're looking at again. We've got divergence and we've got convergence. I'm going to touch briefly on the divergence part right now because it's helpful for what we're doing, but more often than not, we're actually using a convergence aspect of the MACD because it's when it's going in alignment with our trend zone, that's when things are going together. So the aspect of divergence, let me just check, I can hear something, now we're good. The aspects of divergence, you can see here with price in this bullish example, if you can all hopefully see my cursor as well, is that you've got price coming down, and you can see that it says LL, so lower low. Price gives us a lower low, and the MACD or an RSI, there's other ways to read divergence, but for us, it's a MACD by a long shot. And so you see the MACD is giving us a higher low, HL. And so it's divergent in the sense that you've got price coming down and momentum coming up, and so they're doing the opposite things. Once something's coming down and something's coming up, so that would be described as divergent because they're not doing the same thing. So in that sense, after you have a lower low in price and the momentum, you can see that the MACD is showing us a version of momentum. As you've got a higher low printed there, after those two things, you can expect a move up in price. So when you've got a good downward angle in price and a good upward angle in momentum on the MACD, that is bullish and strong. Then you've got a medium version. So that would, some people would call that class A divergence. And so what would be class B? So class B would be medium strength. That's when you've got a double bottom situation with equal lows in price, but you've also still got that higher low, same as over here on the left-hand side, but you've got a higher low in the MACD. So it's still powerful in the sense that the MACD's got the right angle for us, but it's a bit weaker because we've got a double bottom and it hasn't made a complete lower low. When that lower low happens, it just creates that much more of a strength in the divergence. Usually that might even be a stop hunt. It's coming down, grabbing the liquidity of money that's been sitting underneath there, and then off it goes. And we'll touch on that in the real chart in a moment. So weak divergence, some people call that class C. You've got a lower low in price and you've got equal lows or a double bottom on the MACD. So that's the weakest of the bunch. When the MACD is flat, like you've got basically a double bottom in the MACD, but you still got that lower low in price. So you can see from left to right, you're going to have the most divergent being they're both pointing in opposite directions. Medium, price is flat, but you've still got that higher low on the MACD for bullish. And then weak being you've got the lower low in price, but equal lows in the MACD. Hidden, we'll touch on a little bit. It's the reverse in the sense that if you have higher lows printing in price and lower lows in the MACD, that's completely opposite. Then that's a form of what we call hidden divergence, and I'll show you some examples of that on the chart as they show up. But a little more tricky to read on the fly, but your eyes will get used to it eventually. And bearish is just everything the opposite, right? So higher highs in price, lower highs in momentum on the MACD. And then the medium version would be a double top. Same there, flat price, double bottom, double top in price for a bearish one, and a lower high on the MACD. And then the weakest would be having that higher high in price, but that equal high double top on the MACD. And then the hidden bearish divergence being lower high in price and a higher high made in the MACD. So you can see, like in this sense, imagine, price is, I just need to show you some examples because then you'll get it. Like price, if you think about like price coming up, the MACD is giving us a level of energy. Like price here has used all its energy to come up. And so it used more energy to get a lower high here in price. So it took this much amount of energy to get this high, but it used more energy to get up, not even as high. So it's running out of steam. And then from there, it continues down. So I'm going to unshare this screen and rather share my actual trading view screen like this. You guys there, let's see the chat. Can we talk a bit more about divergence, please? Yes, Wayne, we can. I will. So I want to show you some real examples. The energy analogy is powerful. Just checking these questions. How is it that price is coming down, but the MACD is going up? I'll show you. Let's just get to some real life examples. So I've created a new chart here with nothing but a standard MACD, which you can see, but I am going to add our one. And so if you were to add just, a random MACD, you're going to have, let's see, moving, it should come up straight away, the one that I just added. This is how anyone out there who doesn't have access to what we do would find it. Oh, I just pushed something wrong. You'd click that and you'd get the MACD, which I just added there already beforehand, but I'm going to delete those and add our one. So we've got our TRENDFORCE MACD like that. And it is beautiful because we have got, firstly, it's telling us bearish divergence. So some of you guys are getting this done for you already. And it should also have bullish when that shows up in the right way. But there are different ways to read this, guys. So you can read divergence. I can't see the chat anywhere. That's the only thing I wish I could see right now. Let's see if I click it. There we go. I got it back. I've got it back. Let me drag it over there. Bear with. Cool. Okay. So in this example, what are we looking at? This is gold on a 1 hour currently. Let's just see what we got. And I haven't practiced in this, guys. You could throw a chart at me. Let's just go to the NAS maybe and see something that doesn't have a lot. Okay, let's just remove all these drawings and remove 49 drawings. I've got that saved on something else. So let's start on a daily. We've got this over here. Let's just do this. Okay, so let's look for when price started to go up, shall we? So right here, if we're zooming out, this is the NASDAQ, and this is going all the way back to the low of COVID down there, March 2020. Price ran up, and then we came back down. And so before we reverse back up, you can see over, let's look at this. So for instance, right here, this is an example of bullish divergence. I'm going to take this trend line just to draw the lower low in price. So we've got on a daily time frame, price comes up, comes down, forms another low. While this is all happening, what's happening on our MACD? So price is already way down under the zero line. So we're down here. Some people would say that this is, when you're under zero, you're in sell mode, or when you're above zero, you're in buy mode. But obviously, if you're catching the bottom of the move, it's going to be underneath zero. But in this case, you can see that we're that lower low in price, and then our MACD is already drawing for us this higher low right there and saying bullish. And at that point right there, say that you've got, here's a way to read this. As soon as you go from being solid red on that histogram to opaque, that there is potentially the bar that causes the turnaround. And then from there, obviously up we went. And so there's another form of divergence you can read. You can read it off the histogram as well. So you can see we're drawing it here. Dad's Genius Indicator automatically draws that too. And so you can see that this red valley is higher than these ones. And this was coming up already. And you could see that over there, even a more steep version was right there. Price came down and formed this low, and we had that explosion up. But then after that, it also extended further. And when we came down and formed that lower low in price, we got that higher low also over there. And so it's drawing both of them for us. So I just want to show you how obviously the indicator functions for us beautifully. So that showed us that giant move up. I mean, after that on a daily time frame, guys, let's measure what happens. So if you got in after that day, price on the NAS went 2,441 pips. That's a daily time frame divergence. And so moving along, what happens over here? Let's go to the top of that move. We've got a higher high forming. So we've got green candles, red, and then a higher high up there with that big doji, obviously showing us that. And so what do we have? So we don't necessarily see a lower high in price there, but what do we have? Well, we can see that our momentum on the oscillate on the histogram, these mountains have gotten lower and lower. So price has gone up, and the energy, those bursts of coming up, coming down, coming up, coming down, coming up. Anytime you see that little going from opaque to solid in color, that's like another little mountain, so to speak, and that's like a hump that we can measure on. So you can see it more exaggerated. But that right there was telling us price is coming up and the energy here is suffering. And then obviously we get the crossover, which some people read as a valid signal, like Dad mentioned. When the price actually crosses, maybe let's say it's the next one. Well, no, it's in between those days. But going from that day to that day, that candle was the nail in the coffin. And then from there, I mean, yeah, lights out, right? So price after the close of that day went down 2,700 odd pips. So that's reading daily divergence that way. Let's look for some other examples. Let's go here. Where are we? You can see here it's printing us these ones, same deal. And you'll learn to draw these all day. And I'm on a daily chart. So right there, high, lower low. And right there, we've got that higher low. And it's already telling us bullish, doing it for us. And then over here, let's see, man, big explosion now. I'm just trying to find some real nice, clean versions for us, guys. So a little harder to read when it's like that, but if you zoomed in, you would on another time frame, you'd see those kinds of things. Let's see what else we got here. So it's drawing it for us everywhere. I mean, you can just see higher high, bang, drawing it for us already there, lower high on the MACD, and also on the histogram. So some people would say that's double divergence. When you've got divergence on the signal lines and divergence on the histogram, you've got both indicators inside of the MACD telling you the same thing. There's also divergence within the indicator. So that is when you've got one of them is confirmed. So they can be happening the other way. If I see one, I can explain one. But basically that would be when you've got the higher high in price, you've got the lower high in here, and you've got the opposite happening. So you're going to have something like this. The MACD is going to be showing you two different things. And so that's divergence within the indicator. So there's like 16 different ways to pull divergence off an MACD, guys. And obviously we're not going to cover those in extreme detail. But once you see this, you can't unsee it. You just see highs and you just see lower highs. And you see we're printing it already. It's telling us bearish divergence confirmed. And then down it goes. When was this? There we go. 3,000 odd pips there back in July last year. And then we wanted to catch the move up, right? So where are we? So what was the beginning of this big move up from here? So let's see what we can find. That's well, we got a higher, what was the other one? Is that going to be hidden? Let me just find that document that I had behind me here. I'll pull this over. It doesn't really help if you guys can't see it, but I'm going to just blow it up on my side over here. Where did that go? There we go. And let's get back on here. So, oh, my screens are in the way. But let's go for this one. So this would be an example of hidden divergence. So hidden divergence is when price is forming a higher high, but the MACD is forming a lower high. So you can see, or lower low, sorry, higher low in price, higher low HL, lower low in momentum on the MACD. And so price didn't quite break this. So we didn't break this level over here. We didn't get lower than that level, but we've got a higher low. And this is where it gets a little tricky because you don't know if price is going to keep coming down. But when the MACD is this exhausted, like it's come down this far, this move has pretty much blasted out all of its energy to get to this point. At that point there, you need to zoom in and look for another confirmation. So let's just do this. Let's draw a vertical line in here and zoom in on a different time frame on there. Let's go down to a 1 hour and figure out where that was. If I can get that far back, I might have to go to a 4 hour. Sorry, that might be a little far. to go. There we go. There it is there. So what else can we find in this area right here? I'm going to get rid of that little thing there. Let's see. We still have got, yeah, that would have been, I guarantee these lows here, there's going to be something happening in this space. So look, we don't trade on a 4-hour chart most of the time unless you're doing other things. Let's see if it'll let me get this far back, guys. Because then in that moment, the way that we trade, we are zooming in and finding things. Let me just do this. I can see this line. Where'd that line go? Where are we? Sorry, guys. This is take a little bit too long potentially to take me that far. Oh, here we go. Finding things. Finding things. So you can see when we start doing it. There we go. It's this zone right here. Let's see what we can find. So now we just zoomed into a 15-minute chart. Now, did we get a lower low? I don't know if we did. We may. Yep. Oh, we did. So check this out. This is where I like my magnet, because I'm going to draw a horizontal ray on that low, and I will do this all the time when I'm trading for finding sessions. Let's just do what I really do in real time. Let's do this. Sessions by Lux. You guys should all have this indicator by now that I've spoken about. Let's just take a bet that there's going to be a different session here, and it's going to be a stop hunt when this thing loads. It might take a while to load this far back. Oh no, there we go. Monday, Tuesday, we've got that. We just need the boxes to come in and show us some color coding, hopefully. But in the meantime, what we can see is that we still got our, oh, turn the magnet off. We got our lower low here. So we got our stop hunt, and we also got our higher low on the MACD, on the signal line. So check that out. And it's telling us bullish. 15-minute divergence, stop hunt. I can tell you now that that is powerful. When you've got this big W W pattern playing out, and price that moves below, I mean, how much lower was this? Let's just measure this. Magnet tool, I'll tell you exactly how much of a stop hunt it was. Price, what is that? 6 pips, 249 down to 235. No, it's more than that. It's 16 pips. So given that this is the NAS, that's not a huge amount. I mean, obviously a 2-pip stop hunt like we saw last week was smaller, but you can see price didn't push down much. And it's a big doji candle as well. So when you start seeing these kinds of things on higher time frames, guys, I'm just zoomed out. I will zoom in soon. But 15, we already saw that there was a big divergence playing out on the higher 4-hour chart, zoomed in, found it on a 15-minute chart. And if we zoomed in even more into this area, you're going to see some cool things. And so if you were being real conservative, obviously we can turn on TRENDFORCE, but I mean, the structure is the safest way to understand what's going on. And when you start applying TRENDFORCE rules in the context of that, then it's going to get beautiful. So, you start drawing some trend lines, price comes up, closes above, and then at that point there, your trend zones turn blue. And, I guarantee TRENDFORCE would have given us an entry way sooner than that on the 1 3-minute chart. This is the 15. But when you start seeing these kinds of things in higher time frames, a double bottom, massive divergence, reversal up, we would have had an entry somewhere in here. But if price closes above a trend line like that, and the MACD, like this was part of my reason for this morning's trade, when the MACD started to separate like this, I mean, that on a 15-minute chart, I can tell you now that those lower time frames are going to be moving. So on that candle, you can see already that MACD was separating. It has great angle, like it's just starting its big move up. So those are the things that you can start to see when you're zooming in or zooming out, should I say, to start your analysis for the day. It's what's going on higher time frame. So that sessions indicator didn't quite give me the print the boxes as far back as we are, but we'll zoom in and get to where we are today. Let me catch up on this chat. So let me see this. More energy, but Marcus. More energy, but failing to get results means it's going the other way soon. There we go. Zeph, am I right assuming that the MACD equals momentum, which means there are more or less players coming in at a given moment when there is different from price movements? Yeah. So I remember someone once describing it to me, which really clicked, was like someone trying to ride a bike up a hill. And it just takes a certain amount of energy to get there. And so you can see that, whatever happened here, where are we? Like this is Friday, this is like last week. And so getting my handy dandy magnet tool on here, and I'll turn it off for the second placement of this. No, actually I want to do what I do, guys. I do rays. So this is how I draw trend lines. Give you some double stuff happening here. Get a magnet, whoopsie. Get my magnet on, zap that ray to there, get my second point there, and zoom into that. And so what happened while price is coming up and working its way up like this, what's going on in the MACD? So we've got price coming up, And while price is coming up at the same time, we've got, I'm trying to figure out how to explain this here with this drawing. But from that point of that low, I'm just going to draw this in line. So from there, you know, our MACD is down here. It's already pretty low. It's used all this energy to get us, you know, at this point up here to there. And then it starts to grind a little sideways. And this is the afternoon on a Friday. So, you know, this is Asia sort of volume right here, nothing significant. But then there you see it's tired and the MACD starts to come down again. Price gives us that touch over there. I mean, that's where I'm drawing my second point of this trend line. Starts to get a little bit more high, a little more high, but then it uses all this energy up to that point. And then right there, we get that doji and that breakdown. And then right there, it's just used all of its energy, right? And so let's see if we can see. Yeah, I need to zoom in more to catch this one. Let's get in the 5-minute chart and see what that looked like. See if we can catch this. So what did we have right here? On the MACD, we have got, and none of these have I rehearsed whatsoever, but there we go. So check this out. We've got higher highs in price. Let me just turn the magnet off. So at this point, 5-minute chart, you've got higher highs in price. Let's turn on sessions. Let's see what's happening. There we go. So we got London bringing price up. So there we go. What did I say? It was Asia. It was just grinding. It was slow, going a little bit sideways. Into the evening, London pushes us up. And then New York opens up there. And let's just measure this, guys. This is just, you know, from this point to the high, it took 9 bars, 45 minutes of New York saying we're going to go a little bit higher. And that's going to be our false push for the day. And then we're going to fall off a cliff. So price came up. And while price is coming up, what's going on this histogram? We've got this lower high. So that right there is this perfect version of divergence heading into, so New York started over here. You can see clearly price continued to push up, but you can see that this zone is not looking very strong on this MACD. It's closing together, almost crossing down. Get this one little explosion, emotional candle up, BFO, big foreign object is what we will call it. From a previous educator, he might have called it something else, but a big foreign object, big candle out of nowhere, pushes price up to this point. Then what do we get? We get a doji, which is a reversal candle. And then after that doji, we've got that divergence, which the next candle, we go opaque. And at that point right there on a 5-minute chart, you've got 5-minute divergence basically. So you've gone on this MACD. I'm just going to try and draw this out even more for you. So the doji is finished printing. We're now on this candle. That candle closes and you go, it's confirmed opaque. The next one, we basically get the cross. So after that candle finished printing, now the signal line is crossed, or the MACD line's crossed the signal line. I always get them backwards. But either way, we're now in red mode on the MACD on a 5-minute chart. And you can see here that we just start to fall. And I mean, the next thing that we would be doing is, well, you'd be looking to try and figure out some kind of a trend line at the same time, obviously utilizing TRENDFORCE for our entry. But I can tell you now that, look, I don't even have it on here. Let's just get it on here, shall we? TRENDFORCE, load this sucker up, turn off the session, and let's see what this looked like. And so this is a way to anticipate when things are going to move around, guys, when you start to learn to read divergence like this. Let me just check the question. Tim, how strong does the bear bull signal on the MACD rate then versus other signals? It's very strong. The only problem about divergence is that you can have multiple divergence prints. So you can have some false positives. So struggling to see some examples right now of that, but basically it's when you have one and then you get another. So it's like, for instance, here, slower time of, well, this was London. So you can see here, we had one there. And then, so we had this one here, and price came down. Now the question is like, just because you see a divergence, it tells you that price is going to turn. What it doesn't tell you is how significantly. And that's why you don't bet the farm on a divergence. You need other confirmations, like a trend line break, a signal. I mean, look at that counter trend signal from TRENDFORCE, bang on. So right here, we had this higher high in price and this lower high on the MACD. And then it looks like we also had this double hump there. So we've got that flat top happening on the MACD, on the actual signal lines like that. I'd say it's a little bit down. But that there, what did price do? It came down. It didn't fall off a cliff, but it did come down. And then what happened? So it came down and then continued to come up again and came down again. So just because you see one, it doesn't mean that this is the beginning of a move, because you see divergence. You can zoom into a 1-minute chart and know you're going to see divergence and go, oh, I'm expecting a pullback. So coming back to this moment right here, though, What I love about this is, well, A, we got this buy signal down there, which is pretty dang awesome. Price does its thing, runs up. Now we're seeing higher highs. So we know that price eventually is going to, reverse. Sure enough, we actually get a 5-minute doji right at the top. And then that also is confirming our divergence. Then, like I said, price, the MACD turns red. Our trend zone on the MACD is red, while our trend zone up in price is still bullish, which is interesting. So price comes a little bit further, breaks below, and then we get this beautiful counter trend signal with an explosion emoji. And the 55s turn bright red as well. And what I love so much about this MACD right here is how this zone, I've never used this drawing tool, let's see how it works. Can you just see how we are widening and falling? Sorry, that is a terrible drawing, but hopefully you got the gist of that. This zone is just peeling down. And when you start to see that kind of thing, I'm trying to figure out how to delete this now. This is hilarious. Delete, that's horrible. When you start to see this separating and peeling down and price is still going sideways, guys, you know how much of an early indication this is? Like price hasn't broken our trend line yet. We haven't got our signal yet, but for the last how long before our signal popping off was that starting to happen? Like we had 30 minutes of range here. Now you might think I'm looking at range, this is boring, but like if you're starting to see this, you're just waiting for a confirmation up here. So our 5-minute signal, I should probably, let's try this. Let me try split this up a second here. Let me do this. And I'm gonna show you what that looked like on a 1-minute chart. Get us in the same NAS, hopefully. Where are we? And let's just see what it looked like. If I go sync globally, that should happen over here. Bang, where are we? Let's go find that moment on the 1-minute chart and get through all of this and this and this. I think we're getting closer. We're getting closer. Where are we? That is Saturday at 2:55 in the morning. Tuesday. Oh my goodness, sorry guys. 1-minute chart. I've got to like really go back. And it's going to be worth it. So bear with. There it is. Bam, got him. Okay, so there is our, see, price is not even loading for us right now, but that doesn't matter. So what was happening on the 1-minute? So that's when we got our first indication. So the 5-minute signal, sheesh. Okay, so during this 1 minute, there we go. Okay, so we had our 1-minute signal first, because you can see if I click forward, we're still in the same zone on the same 5-minute candle. But if we click forward to there, we're still there. Bam, that's when that 5-minute candle closed. And so somewhere in this space, we got that counter trend signal. MACD is red. 5-minute MACD trend zone's red. The 5-minute trend zone up here was probably red. It's a counter trend signal. But my gosh, we've already seen all the divergence. I mean, you can see it on the 1-minute chart here. It's saying it all over the show. But the bigger hump to the bigger hump is pretty much what you're going to notice on the higher time frames. So that point, like I'm just going to show an example. So you're going to see the difference between the 1-minute MACD and the 5. So there's that hump right there. I'm going to say sync. I'm going to change the color of this so we can see it on the left-hand side. Let's make it yellow. Let's make it a bit bigger. And so there we go. Now we can see it. And over here, that hump over there. So now, hopefully, oh, click on the right thing. Oh, what's going on? Click, click, click. I don't know what's going on with that, but it's not allowing me to sync it. Anyway, okay, well, I think you guys get the gist of this. I'm just going to draw it for us in the same place. Ping around there. So you can see we have these higher highs in price in the 5-minute. Same thing here. We're getting 1-minute humps and humps and humps and humps. And at the same time, we're getting bearish divergence, and one more push back up, which was that big BFO. And then after that is when we broke. And once price broke down, I'm getting an alert. Some of you might be trading right now. That is probably a 3 or 5-minute sell on gold. But you can see right there, guys, that would have been a phenomenal trade if you were awake to do it. But you can see how it's happening on the 5-minute chart, and the MACD is getting tired. And meanwhile, on the 1-minute, by the time this happens over here with that counter trend signal, the MACD is already underneath 0 and it's already peeling down, and it's got a beautiful separation and angle to it, and that would have just been a lights out trade. And even if you just took that counter trend signal wherever this candle closed, sorry, I can't see it right now, to the 55, I mean, that's tiny. Where's the 233? That's nothing crazy, 11 pips. But if you study New York and it opens, it's usually a false push up and a or a false push up or down, and then a very big move in another direction. So showing a little bit of that. Let me, oh, sorry, I'm trying to turn things off, not turn things on, and come back to our chat and just see where we're up to with everyone. So I can turn that off, go back to there we go, 5, and turn some indicators off. And let's just catch up on where I am. So let's see, Micah, session settings. Can you send a screenshot of your settings to the group chat? Definitely, bro. Am I right that it was right on US Open? Yes. Let's turn it on here and see if it loads. There we go. So you can see here, I've never fiddled with these settings on this thing. You can get in here and look at all the time zones that it's going to mark for you. And you can adjust these based on the actual time, whether it's daylight savings. I don't think these change for daylight savings. So look, you can manually change them or you can leave them what they are. Odds are, what are we looking at here? Who knows? 245. Yeah, not too sure exactly, but you can see like New York is opened, it's pushed up in one direction and then it's reversed down. So that right there, guys, was the higher the time frame with divergence, the stronger the divergence. So if you're seeing it like we did earlier on a daily chart or a 4-hour chart or a 15-minute chart even, that's gonna play out, and then you can zoom in and find that 5-minute, 3-minute, 1-minute. If you get those multiple divergences or divergence within divergence, it gets powerful. And so, I mean, look at how steep this is here. Like, look at this. So you've got the end of New York, end of the day, and then price, this is market close, closes down here, gives us like a falling wedge, which is also a bearish pattern in itself. I mean, this kind of thing. Price gaps up, but I mean, look at what's happening in this MACD, guys. At the end of the New York session, price is giving us, let me just compress this. This is huge. Price is just like grinding low, giving us this bullish, downward wedge pattern. And then also this massive higher low in the MACD. And then sure enough, after the open, it just pops out of there and up it goes. And I mean, nothing crazy. Like it's not the right time of day to be trading necessarily at that open there. I mean, price still went up 132 pips. So, there's something. And then there, what was that? Well, that was pretty much our high of the day. Like, I mean, if you're drawing, this is what I like to do, come in here and draw some horizontal rays and things with magnets. So I know, okay, the high of that, there's the high of Tokyo or Sydney, and I'll actually color code these to the indicator. So I've got all my little colors here. So I know like, okay, well, that was, that red line's telling me that was the high of Sydney. Then what happens? Price dips down, comes down to Sydney, Tokyo volume still there. London has started, where are we? This is obviously Monday. So this is yesterday. Price is over there right now. And then what happens? Price comes up during London. Look at this, guys. This is what I'm talking about. So Tokyo's done over here. Price, London then pushes up just a little bit higher because everyone who was selling this move right here, everyone who, can't draw apparently with a magnet. Everyone who was selling, why can't I draw with this tool? Brush. Okay, there we go. Everyone who sold this, they are putting their stop losses where? I need to find a little money emoji or something. Like there's got to be one somewhere in here. But anyway, this is where the money is, right here. Stops above these highs, price fell down. So then London pushes it back up to knock out the stop losses of the people that have been doing this, and then continues down. And then New York opens up and it goes a little bit further. But what happens? What's going on? Like we're looking at the MACD during that period. You're going to see the same sorts of things. So what do we have here? This is a little bit trickier to see, but look at that. That was a violent spike. Looking for some more up. There's a little bit of a, let me delete this. And this. What do we got here? Lower low. So even that, guys, you're going to start seeing these things everywhere. So here's a lower low in price. And what do we have on that MACD? We've got, bam, higher low drawn for us on the histogram, and then price rockets up. I mean, how high did that go? After that doji and that candle, price ran up 40 pips. So yeah, you're going to see divergence all over the place, guys. Now, it is something that is very, very powerful to learn, but trading it on its own can be, I would say, very risky because you need confirmations. So let's just go to the questions and see where we're up to. Can you compare NAS 1-minute MACD versus 3-minute MACD since 7:30 p.m.? Yes, sir. Let's go. So, because this is what we're doing with TRENDFORCE, right? I'm very often utilizing a 1, 3, and a 5-minute. And let's just get this going here. Where are we? Reset chart. Sorry guys, let's just get this to where I want it to be. Where are we? Price is struggling to load. Let's get it on there. And this is going to be our, we'll make it a 3 minute. You see it on the, let me just double check. 1 minute and 3 minute. Yep. Okay, cool. So I should probably just go to the example of my trade this morning, but for now, I don't know what's going on with the NAS. Sorry, this is messed itself up. Let me delete this. I can see that it's decided to throw itself up there and do weird things. So I'm going to delete it quick and re-add it and try to get this back where it should be. And that's strange. Okay, sorry guys. App doing funny things to me. Just go back like this, go back like this. Okay, hopefully if I just copy this MACD over, we're going to be rosy and back where we want to be. So there, sweetness. We're back. Okay, we've got a 1 minute on the right, we've got a 3 minute on the left. Let's take a look at this thing from, you said 7:30 p.m., right, Marcus? Yep. So where are we? 7:42, 7:30. Okay, so we are here. That's what you want us to look at. Let's just sync this up and see what's going on. So right here, I don't have a price scale. Sorry guys, this thing's being, it's on the other side. What is going on with this app tonight? Okay, that's different. So can I sync these? Anyway, let's just reset it and try to get them at least level with each other. Okay, bring them down. There we go. So looking at the MACD, 1 minute is giving us some things. 3 minute is giving us some things. Let's just see what this looks like here. So let's just see here. So we've got lower, high. Yeah, so we've got some things happening. So on the 3 minute chart, we've got obviously these highs that are going up. And then you can already see on the 3 minute chart, it's drawn for us. You know, we've got the histogram giving us these lower highs. So even from this point, you know, price came back down, but I love how Dad's programmed this because it's picking up this longer trend of the histogram printing lower and lower. Basically, the gaps between the signal lines here are getting closer and closer together. And so trend running out of steam. So that's the 3 minute. So while that's going on, we're seeing that higher in price. And then we get this, you know, this double top almost, you know, going in the other direction. But after that, what's going on the 1 minute chart? I'm just going to see at that point in time, we've got pretty similar stuff. It's a little bit flat. Or not really giving it to us in the clear sense. So, or it is over there, same humps, right? So like, look, if I do this, let's see what happens. Sync, no, that's not gonna let me do it. Okay, so weird things are happening. But between there and there, that is still a lower hump. So, you know, we've got price coming up. It's a little weird from here, but you can see that that is still a higher high. So it's sometimes, this is why other time frames can be handy, because I'm just going to actually sync this and see if I can have the same line. Sync globally. Yeah. And then, you know, just take it further back. So that is still right there, a higher high in price on that time frame. So there's a 3 minute divergence that is printed. The 1 minute, a little bit trickier to see it right here. But what I do like about this is, let's get our TRENDFORCE happening. We get a 3 minute sell signal. Look at that. Look at that. And let's just get TRENDFORCE on the other side and put them over here when it loads, and let's see what kind of thing we had. And I mean, straight out the gate, I was about to draw a trend line, but it did it for me. So, man, this is weird. That's over there. So what do we have? We've got a 3 minute signal that fires for us on, sorry, over there. Let me just see, I want to know when that actually fired. So yeah, it fired on that trend line break. That is a very, very safe entry. Aside from this little, you know, bit of support, this red zone right here, that there is, man, a trend line break after a three minute divergence. Price comes down, peels down quite nicely, and we get a sell signal on the 3 minute. Now to take a sell off just the 3, we need to look at something higher, right? So I would be looking at, I often look at the 5. It's more appropriate to look at the 8 if you're going to get higher in time frames. Oh goodness, sorry, this is now on the wrong side of this, but I would rather have this on the 8. I mean, on the far left. See where we were up there. 8 minute chart, just to see what it's looking like, is, okay, coolness. So let me draw this line Yeah, it's synced up, so it's that one. I'm not sure what that white one is right now. Let's get rid of him. Right, so the 8-minute chart, the MACD, the trend zone is still bullish, and so is the MACD, and so it takes a little longer, right? So at this point there, which is later, let's get this tool. The 8-minute, if you were taking that 3-minute signal, you need a higher time frame, right? So with our rules, if you want to see our rules, they are here. Remember, we've got trend zone alignment, 1 point for current time frame, 1 point for 3 times higher. So that's what we're looking for right now. And that trend zone alignment with the trend zone on the price and with the MACD zone as well. So getting back to where we were over here. So this one being this one, I want to measure, let's make a different color and flick him everywhere. Where is he? Why is he not showing up? I'm on, I don't know where or what's going on, guys. My charts are being a little bit funny. I'm pretty sure that is the same time of day. No, that says 3:28. I'm looking at the wrong time on, really? Check that out. What do you know? Sorry, guys. We want to be the right, there we go. Sorry, there we go. Right time frame. See, not trading view, user error. That's my fault. So, ooh, I like this. 3-minute signal, simultaneous 8-minute signal. MACD looking like, well, by the end of that 8 minutes, it was lights out, but obviously at that point, prices already dropped and pretty much come down to almost TP1. So if you're trading off the 1-minute chart, you might have not had necessarily a 1-minute signal as such, but remember, man, 55 turning bright red, that's a signal, that trend zone violently shifting, like it just expanding. You can see what I'm talking about there, guys. That trend zone is getting wider. The separation as price broke the 55, broke the 233, came back up. I need to blow this up for you guys. This is what was part of my trade this morning. So not this trade, but the same type of thing. So see, yeah, price action. Oh, magnet. No, that's just weird. Sorry, guys, I don't usually use that tool. Price comes down, comes back up. Can you see how it touches the 55 and then rejects? That is rejection of a line. Price coming down, coming back up, rejecting that line, and then from there, that's it. Rejecting that 55 and then it's lights out. That is the high and then it's gone. Comes down, closes below trend. So that's our triangle telling us we're back on trend coming down, I'm pretty sure. And then from there, it's this trend line break. And the 3-minute gives us the sell signal on the trend line break. The only issue here we have is space, because one of our rules, like we know, S for space, is there space or price to hit TP1? Now, this is the rule that, it's going to sound weird, this is the rule I disrespect the most, because price is going to do what price is going to do. And just because there were some buyers down here, doesn't mean that price is strong enough to push through. When the 55 is bright red, that is a strong indication that price is going to violate whatever space issues you might have. So right there, the 55 turns bright, amazing separation. The MACD on this 1 minute is wide and cutting through. Coming back to what Marcus was actually asking for was the 3-minute comparison. So I'm going to ditch the 8-minute now because we've already seen that it was in good alignment for us. Drawing tool off. But you can see here, turn off. No, click off, there we go. Right. So we already know that this 3-minute signal is good for us because the 8-minute was pretty much in alignment as well. But the 1 minute, guys, by the time we get the 1 minute entry, it's beautiful. And yes, we've got this zone, but will price break through? Well, you never know at the time, but when the 55 is bright red and you've got that kind of separation, you've got the angle of the 21 on the 3 times higher being the 3-minute pointing down, it's beautiful. So that was an example, Marcus, that you're asking for. So in terms of the MACD difference, I didn't really say too much about the 1 minute because this is a little tricky because these are giving us higher highs and higher highs. And yeah, the 1 minute's not really giving us enough in this zone right here. But overall, if you're measuring further back, it sure is in terms of the higher high on the 3-minute price action and the lower highs on the histogram. So yeah, guys, a little bit of an example on the fly. I don't know what's going on with this chart. It's confusing me so much having these numbers together. But yeah, I mean, let's just look at real time, right? Let's see what's going on. We've got all these lines. They're printing for us, bullish divergence, because we've got, this is why you don't just take a trade because of divergence. So ever since this candle, which was our first lower low, so when this candle broke the low, you can see there, bang, we're lower now, we're lower in price, and currently speaking, the histogram was higher. Each of these lines is being drawn for us because it's telling us we're still bullish, divergence, we're still bullish, and then what? We get opaque. So then the MACD goes opaque, we get one more solid, and then after that, sure enough, well, now we've got a bit of a doji. It'll be interesting to see what happens in price. So it's come down to the 3, And this is where, multiple time frame. I mean, you're not going to be picking the bottom and entering a buy right here. That's crazy. There's nothing in our rules that suggests a buy, but the divergence is already telling you, I wonder if price is going to start to reverse up right now. And then you could wait for price to either come up to the moving averages, give you another sell signal, and off you go. I mean, there's a 1 minute, the most recent 1 minute signal at 8:45, 13 minutes ago, hit TP3 right there. So if you were taking that signal, the way that you draw it out, short position at the close of that candle, stop loss sitting there on 11 or so pips. If you were aiming for TP3, there is a 1 to 3 risk reward ratio. And if you sync that up across there, you would see, price came back up. 3 minute chart over here. Price breaks down. This whole trend zone on the 3 minute is still wide and widening. Price comes back up, pretty much touches it, almost. I'd say it actually doesn't, but it comes up, doesn't even get to, rejects the monthly. And I'm not on Heikin-Ashi candles, so obviously there's going to be some other pivots that we might notice. But it gives us what on the 3 minute, guys? This is our cheat code pattern. Bullish candle, doji, bearish. That right there on the 3 minute chart into a 1 minute signal during that doji. Hopefully you were in, took my TP on TP S3 daily. There we go, Zeph. You guys are like taking it out while we're here. So you guys are starting to see all these different things, hopefully. I mean, I'm sorry, I'm getting a little bit distracted from the MACD right now, but that right there is the price action happening, which, and then well, now what? Should you hold this trade? Well, you might hold it till the next, what do we have here? The S4 is down there on Heikin-Ashi. The next target would have been your S3 on normal candles, and that's where price went to. But you got to remember, you got these lower lows in price, and the MACD is telling you bullish divergence, which means you can expect price to turn around. So if you got your TP3, that would have been a great place to maybe take your profit, whereas it came up and then went lower, and then, it's the bullish divergence is telling you take the pips. Price is likely to push back up. And there's nothing worse than getting knocked out for a loss or break even when you had the pips. So it is continuing. The MACD on the 3 minute is still nice and wide, and the 1 minute is still messing around. So who knows? Price might grind down to the quarterly, but hopefully that's given you guys the little bit of a key to it right there. Sorry, I have been talking way too long. Let me catch up on these questions. Just took that 35 pip drop. Love it. TP there, Marcus. They were all pretty good re-entries. Too busy listening. Sorry, guys. Hopefully you're learning, and you can take your pips either after this or tomorrow morning. But hopefully that really dropped it for you guys. Let me go back to that picture. How do I screen share this? So hopefully you were seeing this over and over and over again. I'm sure you guys can see this. I'm screen sharing this image. So what is divergent? You're seeing those lower lows and the higher lows in the MACD, or you're seeing those higher highs and lower highs in the MACD for that reverse back down. So you guys, you want just, this is something, because our first strategy that we ever learned, like I was running trading Zooms with Dynamic Edge 3 years ago. I was talking to Dad about today, and that was a divergence-led strategy. What I mean by divergence-led, the very first thing that we were trained to look for was divergence. It was like A, B, C, D, always be checking divergence. So once you see it a lot, you can't unsee it, and so that's why I can see it pretty quickly. It's not critical for the way that we trade, in the sense of it's not part of our rules for TRENDFORCE. You've got enough with the zones like that, and that's the thing. I just showed you a bunch of divergence, but for us, it's actually convergence that it reaffirms to me that I want to be in this trade. We're seeing the trend zones in price going the same way. They're going down, and the MACDs are doing the same thing and going down. So when they're doing the same thing, that will be convergence. They're going in the same direction. So for us, going with trend, the force of the trend, TRENDFORCE, we're looking for the MACD to be singing the same song as price. And so this morning's example, which I put in the chat, I didn't have the most buy the book rule entry on the entry point for the trade, but the MACDs, I was loving them. The reason I held them, someone was asking me earlier, was that the MACD on the 15-minute chart had just crossed and was going up above the zero line, which tells me like this thing is going to keep going, and sure enough, it ran. So guys, I've gone on way too long. So I'm going to throw it back at Dad for some more thoughts, and then we can always cover this in more detail later, or maybe even during our live session on Thursday morning, or the next time we're live analyzing things. But Dad, if you're still there, want to chime back in?
I am still here very much, Tita. That was so good. Well done. That was a masterclass of divergence. Let me just jump in straight and share my screen again. If you can let me share my screen. There we go. Share. So guys, just in ending, I'm very excited. I contacted Ty last week and said, man, I've done something that I'm really excited about. We need to back test it a lot more. But I want to show you something that I've been working on. And just over the weekend, I've been thinking about something about simplifying this indicator even more. And we haven't looked at the MACD. Tonight is MACD night. So currently, most people's setups would look something like this. This is our MACD, and here is our TRENDFORCE oscillator. And we use that information, to make decisions, how strong the trend is, when to enter, etc., etc. But it's weird. On Thursday nights, as I was about to go to sleep, I almost heard this voice say, combine the two into one and use the main trend bar on the oscillator as the MACD histogram. And it was like came so quickly. I was about to go to sleep. I got my phone out and I emailed myself and I just wrote the thought down. Then I got up the next morning and which was Friday, so a day off, of course. I'm off on Thursdays, Fridays. And I immediately started working on it on Friday. And when I did it, I just couldn't believe how it simplified the whole indicator. So I've only just got it going on Friday. It finished on Saturday. It needs some work, but if at the moment, this is what it looks like. We're trying to get rid of noise. Now, if you look at the MACD and our TRENDFORCE oscillator, there is like a lot of noise there. So I want you to see what happens when I combine them into one and how well it works. Now, this is the 3-minute. And what I want to show you tonight is just how phenomenal it is for staying in trades. So this is now, I'm about to click, you're about to see it for the first time. Ta-da! Okay, then what I'm going to do, you can see now those two have been combined into one. So whenever the main trend bar in the oscillator goes red, so does the oscillator. When there's a pullback, it goes dark, so it covers the same colors. But look how easy it is. I'm now going to delete those two because they have now been combined into one. So, sorry, deleted the wrong one. Let me just get it back from the NAS. I'll just copy it back here. We're going to come back to the NAS. Let me just put it back here, paste, and let me take the oscillator out. Okay, so this is what it looks like. I'm going to blow it up to make it really big. Now, it takes a while to get your head around this, but I want to show you how powerful this now becomes. So this is the histogram. Remember, we hadn't historically used the histogram a lot in the strategy. We mainly were looking at the MACD, the trend zone, between the MACD and the signal line. But I want to show you something powerful. I'll look at a few examples because the one thing I've said to Ty, I want to stay in trades longer. So if we take, for example, this was Saturday morning. I got so excited when I saw this. This is the sell signal at 5:51. And this was a huge trade. If you look at that signal, 5:51, it ended up dropping 400 and almost, let's call it 450 pips, massive. But look, if you looked now at the new MACD that I'm busy working on, you get a sell signal. The MACD is bright red. I mean, there was a pullback, there was a pullback, there was a pullback. But can you see now on the 1 minute, it won't work as well. This is why I like the 3-minute, but you could have taken that sell, and as long as the histogram, which is now based on the oscillator of the TRENDFORCE, is red, you can stay in the trade. So if you entered on that sell signal and you only pulled out, can you see when the oscillator goes green? Even that was basically open the next day. There was still 310 pips there. Crazy. So look at this now. You have to look at much less information. Okay, this is the opening candle. It opens on Monday morning, yesterday. I would never take the opening candle, but if you took here and you stay in, well, let me just, wait a sec. Let me just take that. If you stayed in that trade, look at this, until the histogram, so say you got in over there, and look at that, and you stay in the trade until you get the first red bar on the histogram, that would have been over there. There was 175 pips. I mean, it's crazy, but I'm still back testing. But this really does simplify the whole thing. I mean, if you look at this morning, okay, let's look at this morning. Okay, so let's just say you got in. I mean, look, not many people are awake now, but even if you took that, look, histogram goes bright red. We've got a boost here, which is as good as a sell signal. I mean, the other things to consider, but I'm just giving some quick examples. Even if you stayed in until the first bright green bar, that candle opened about over there, there was 178 pips there. And this is now this morning, look here. So let's say you took the first green bar before the signal and you stayed in. Okay, that one didn't work out. That was one that didn't work out. But look at the NAS. It's for when you get long trades. So if you look at the NAS from this morning, so this was the old MACD. This is the new MACD. So I'm still back testing to get it really safe. But here was a sell signal. This was Tuesday morning. Yep. So there's a sell signal. If you just entered on the red bar, so if you got in over there and you stayed in, let me get this always doesn't work so well. First red bar. I'm trying to get my measurement tool working. First, and you stayed in until the first green bar. There was 173 pips. I mean, it's crazy. Even this counter trend, I think even the counter trend, there was a counter trend signal, but if you got it, I'm just showing you how accurate this now becomes. If you entered on the green bar and you stayed in until the first red bar, there were still 72 pips. So, I mean, I'm very excited about this. I think this is going to revolutionize a whole system and make it so much easier. And there's just countless examples where I've gone and tested, where it's just crazy that if you stay in, like when was this? This is the NAS. So this is the open. So you wouldn't want to be in on the open candle, but if you waited for the next candle, it's bright red. And even if you hold that trade until the first bright green bar and you got out there, 203 pips. Now, it won't work as well in the 1 minute because the pullbacks, it's more sensitive. But look, I'm just like very, very excited. So you're the first people to see this. I think we're onto something. So I'd like to get some feedback. This is a way, way simpler way to trade. There's also less colors. Okay, look, I've got them brights, but of course, everything is edible. You can tone down these colors. But basically, once the color changes on the 3 minute, if it's provided it's a chunky move, you can stay in until the histogram changes. That means the trend is changing. So, I mean, that's just a quick bite to look at, but I'm very excited. If you look, let's just look at gold. Did I look at gold? Even on gold this morning, this was gold at 720. Histogram goes bright. And if you stayed in, let's see if that worked. If you stayed in until the first red, that bar would have opened there. Look, there was still almost 50 pips on gold, just looking at the histogram. Honestly, I said to Ty, you could almost just use this MACD now by itself, the way it's working. Look, here's a counter trend signal. This is now in gold. This is gold. What time was this counter trend? Quarter past 4, counter trend signal. Especially the 3 minute. Look, it's bright red. I mean, there was a rocket. You could have entered on the rocket bright red. You could have stayed in because look, the histogram has not gone bright. You could still be in that trade. You could have been 170 pips up on gold from that signal based on the histogram not changing colors. So guys, I think this is massive. I'm just so excited about this. And I've got to back test more, but this looks like this could be our TRENDFORCE MACD version 2. Again, we don't need the old TRENDFORCE oscillator. It simplifies the whole thing. And you can see I've put in the reverse re-enter arrow triangles. I've included them in this MACD. So I think it takes away a lot of the noise and simplifies the progress, the whole indicator significantly. And got to test some more, but I think this is really on the cards for us, especially the 3 minute. I'm just very excited how you can stay in for trades way longer. And you can milk it right to the end. I know sometimes you get these big trades, and now this is a way, especially on the 3 minute. And of course, as you go higher, it works even better. But from the 3 minute upwards, if you use this method, I think we're on a winner here. So I'll end there, and I'll stop my share.
The chat is saying, unlocking new levels, Tim. It's so clean. Wow. Looks so much more simple. Love it. Lots of encouragement and whatnot. But yeah, so guys, the other cool thing is that this means 2 indicators instead of 3, which means you also get away with a free TradingView subscription if you're a brand new trader and you haven't got a paid subscription. So Dad, thank you. Thank you, as always. It's, I mean, that in itself. So, I mean, guys, TRENDFORCE, the original TRENDFORCE oscillator is where this all began. And that's obviously changed the game for us entirely. But combining that into the MACD, it does obviously mean less noise, and we still, like anything, it takes a little while to read it. Dad's going to keep testing it. Wanted to give you a sneak peek now to let you know that we're never sleeping on this. We are constantly changing, developing, tweaking, tuning, looking for better ways to get in, looking for better ways to stay in, better ways to get out at the right time. So, Dad, once again, thank you so much for putting in all of that time and energy and never turning
No worries.
your divine receptor off or picking up those downloads. Guys, we've run way later than usual, but I trust there was some value in there for you tonight. If you want more, let us know. We can definitely cover this more. And on our live sessions too, I ran the one we did on Friday as a little bonus. I'll see how I'm feeling this week. Maybe we'll do a double dip again, and I will definitely talk about divergence if I'm ever leading a session. So otherwise, guys, we'll wrap it up there. Dad,
Cool. Thanks guys for joining us.
Thanks everyone for joining us live. If you're watching this recording and you have not clicked subscribe yet, please do that. And we will see you in the next one. In the meantime, trade safe everyone, and we'll catch you soon. All right, good night.
Good night, everyone.